this is T.Mayne here, back again with another awesome YouTube video. Now before we actually get into today's topic, what I would love to suggest, guys, the comment section is absolutely yours. If you have any concepts or any ideas, something that you would like me to go over, please do type it in the comment section. Otherwise, guys, I encourage you to watch the whole video until the end to see if this content was actually valuable before you drop that like. So let's get into stuff, guys. So in today's topic, we're going to be getting into the fundamentals of every chart and basically narrowing our focus and understanding what to pay attention to when we are looking at the different charts that we trade. So to get into things, guys, what I just wanted to go over was the fundamentals of every chart. Now you can see I have 4 points here. We're going to go through the 4 points. The first point is that every chart functions on time and price. Now to actually draw that in for you guys, on our x-axis we have an x-axis and we have a y-axis. At the bottom of every chart you will see obviously dates and all of those things. That is essentially our time. So remember, we said every chart functions on time and obviously our price. Now our next point that we have there are that candlesticks represent these changes. What changes? The changes over time that price makes. So obviously, like here, if we see a nice big red candlestick going to the downside, then we know that for this specific time, whether it's from 3 o'clock to 4 o'clock, if this is an H1 chart, from 3 to 4, this is the movement in price. So price started at this high, price closed at this low. So let's just say this was 45 and this was probably 40. So we know that the candlesticks are showing us what is the price movement over a specified time. Now, another thing that we want to talk about here is that big candles show more imbalance between buyers and sellers. Now, what does that mean? That obviously means that if we see a big candlestick, remember in our previous video we discussed why the market moves, and obviously if we see large moves in the market, then we know that there was a slightly bigger or more than average imbalance between buyers and sellers. And obviously if there's more sellers in the market, then this market will make that move to the downside, looking for buyers to jump into the market. And so hence bigger candlesticks obviously show us a greater imbalance, and obviously the inverse would be true for smaller candles. That smaller candles then show us a relatively balanced out market, or a relative balance between both buyers and sellers. Now let's get into the actual information, what we're going to use, guys. Remember, when I do these YouTube videos, I want you guys to leave with something that's not specific to one move in the market, but I want you guys to leave with something that you can use and imply in every single market whenever you're looking at the charts. Now, based off this information that we have here, I think I'm just going to erase all of this stuff over here so that we can get into the actual meat of today's YouTube video. Now, we do have obviously time at the bottom, we have price on the top, and like we discussed, guys, every candle or every chart will basically move according to these things here. We'll see fluctuations based off time and price. Now, what I want us to really understand, and the real intention, is what to focus on. We discussed there's time and we discussed there's price. Now those should obviously be the two main things that we focus on. Now with regards to time, let's separate the two and let's just talk about time for a second. Let's just say that this is the price action that we're looking at for one particular day. Now on this day, we can understand what's happening according to time. You know, you guys that are traders that are familiar already know that we have sessions. So what each session is obviously, or let's even talk about the sessions, because a lot of people don't really understand why we call the Asian session, the London session, and so on. So the reason why the Asian session is called the Asian session is because that is the time where all of the Asian markets, remember every country has their own stock exchange, and so that is the time where the Asian stock exchanges obviously are open and transacting for business. And during the London session, all of the London stock exchanges, like for example your DAX which would be considered or which would open during London Equity Hour. Obviously, all of those are then trading. And then in New York, obviously your normal, your NASDAQ, your New York Stock Exchange, whatever else there is, open at that specific time. Now, that's why we have these individual sessions. Now, remember, we're speaking about time, we're speaking about sessions. So in each of these sessions, there are different market participants. Now, let's think about the Asian session. In the Asian session, obviously all of the Asian traders are up, they're doing their thing. London session, let's think about who are the main investors, guys. Obviously, if we think about the whole globe, the whole earth as a whole, we understand that majority of the traders, or at least majority of the hedge funds, institutions, and smart money traders are in both London and New York. So like we discussed, looking at things according to time, we'll go over a quick template. Let me just erase this. Let's just talk about the template as well. We'll go over a quick template. Now we discussed that obviously in the Asian session, there's Asian traders, which are obviously not the majority of the traders that are trading, obviously in terms of volume when we consider the whole globe. So Asian sessions normally are characterized by ranging markets. Now we'll always see in the morning, in the beginning, obviously we're going to talk about this South African time because we are in South Africa. For us, the Asian session starts at 1 a.m. in the morning and goes all the way up till 10 a.m. Now, during Asian session, we normally have consolidating markets. So we'll normally find that Asian session will draw out a range for us with a nice high and a nice low. And what happens in the next session? Now we're just going to speak about time and the characteristics of time, why we should be paying attention to time. Now, in the London session, obviously London traders are coming in. So we have that London volatility. Now we understand just by the general characteristics of a ranging market that ranging markets, obviously people are trading off the highs and people are trading off the lows. So where are these people's stop losses? On the outside of this range. So we know we have some stops over here, we have some stops over here. London session traders come in at about 10 a.m. and then what do? They obviously look for the money. So typically what we see during the London session is an expansion of the Asian range. So we have highs in the Asian range, we have lows. What we do see then going into London session is an expansion of this range where we'll break the range to the bottom, maybe break the range to the top. So we expand this range. Now, what happens? Obviously, we know New York session in South Africa starts at about 2 p.m. and obviously they will overlap. Let me just erase this so that we can extend and not be limited. We then have at 6 p.m. This is when London session ends. So this is Asia. London is basically from 10 a.m. to 6 p.m. and then New York session basically starts at 2 p.m. Now what happens during the New York session? New York sessions typically you find the trend. So Asian session we establish a range. London session we expand this range, and during the New York session normally markets trend. So we stop out all of these traders, we create a low of the day or a low of the session, we create a high of the day or a high of the session, and in the New York time, New York trading time is where we normally find after the dumb money has basically exited the market, after the stops have been hunted, then we normally see this market begin to trend in our New York time. Obviously maybe to the low of the day, or if the inverse is happening, maybe you'll see that trend going over to the high of the day. Now London session in South African time ends at 11 p.m. So we'll do that 11 p.m. So obviously from 2 till 11, that's the New York session. So the reason why we're talking about I almost said price. The reason why we're talking about time now is because we want to understand the importance of time. We want to narrow down our focus. We know that in Forex trading, or while trading any market, we need to be paying attention to the time. On to price. Now we've discussed what the market is doing over is period of time. Now this is over a day, one typical day. Now you'll see this cycle obviously happening over the space, or you'll see the cycle on the 1 minute chart where we'll have a range, we'll have an expansion, then we'll have a trend. You'll see this on the 5 minute, you'll see this on the 1 hour, you'll see this on the 4 hour, you'll see this on the daily chart, where on the daily chart, guys, obviously on the daily these things take a lot more time to develop, but on the daily chart itself you'll see a range establish itself, you'll see an expansion of the range, and then you'll see a trend move that follows afterwards. Now we're going on to the reason, or basically the importance of actually paying attention to now the actual price values. So going on to price, when we're looking at price, we want to pay attention to two main things. The first thing that we want to pay attention to is where are we? Within the cycle, within price, we want to know where are we. Now, we understand already, or we probably, as traders, we probably come across this whole notion of paying attention to these psychological levels or these psychological areas. And these areas are basically denoted by double zeros and 50s. Now, obviously, if we were trading, let's just actually label this. Let's just say we were trading AUD JPY. Now, AUD JPY obviously will have a price like, for example, 117.532 or something like that. Obviously, so this will be the price. Now, we want to pay attention to these psychological levels where we see obviously prices ending in 50 or where we see prices ending in double zero. So we want to be paying attention to where is price. Is price at our 50 levels? Is price at our double zero levels? Obviously the next would be 50 again, and then we'd see double zeros. Now obviously in between this would be 25 and this would be 75. So we're understanding the levels now, because guys, these price values are actually respected. People are looking to get into the market at round numbers that feel very comfortable. People are looking to take profits at round numbers that are comfortable. Also, if we talk about maybe even market makers and the like, they obviously have a quota to meet for the specific day. Now maybe for the specific day, a specific market maker would be given the task of collecting or maybe moving the market a certain amount of pips. So obviously, if we're looking at price, remember double zeros and 50s, we're actually looking at the amount of pips that are being traded within a particular day. Now we'll find maybe that our ranges maybe are 25 pip ranges or 50 pip ranges, and obviously after the expansion maybe they'll expand the market 25 pips to the upside above this range. We'll go through the range to the bottom of the range, expand this range 25 pips below the range, and then we'll trade. Nonetheless, the point of why I'm saying this is that price is important. Now the second thing that we want to pay attention to obviously when we're looking at price is we want to know, or we want to understand the volume that is being traded at a specific price. Remember in our previous video when we were going over imbalances, we basically discussed with the imbalances that prices are looking for fair value areas where both buyers and sellers are matched within the market. So obviously, if we look at, or we just take the same example that we have here, if we see this range being established, we obviously can denote, or we can get the idea that the mean price, the prices, or the price that is obviously fair value, in this case the price that the chart is trading around, is within this range. So there's fair prices going on here. Obviously when markets leave fair prices, they trade fast. So you'll find that the stop hunt happens maybe in the form of a pin bar to the downside, or maybe on those lower time frames we might see a breakout followed by a reversal, maybe a double bottom structure or something like that. But nonetheless, these stop hunts that move out of fair value areas happen very quickly. Again, when prices move away from these fair value areas, remember this is, or let's just use a red line. Use a red line for this fair value area. When prices trade obviously away from this fair value area, they want to come back to the fair value area. So they'll trade fast outside, maybe they'll rush back in and then consolidate a little bit around fair value area and then shoot again to the downside, because prices always, the charts always want to match both buyers and sellers. So remember, the second thing that we're speaking about is the volume that is traded at a specific price. We want to understand how much volume, or where are traders looking to execute those positions. Obviously, there is an indicator to spot volume. It's called the volume profile. Let's just type that in if anyone wants to go into the volume profile. And we'll obviously maybe even go into a few charts after this session just to explain the general understanding or the general overview of what the volume profile essentially looks like and how to actually use the volume profile. So guys, I hope you guys enjoyed this video. We discussed basically that every chart is functions on the fundamentals of price, of price and of time. Obviously, time on our x-axis, price on our y-axis. We also discussed the importance of paying attention to the different times, because different things are happening on different times or at different times. The market is always doing something, guys, and if we understand the basic general functions of the market, we are able to make those better trading decisions, or even just understand the movement of the market just a little bit more in depth. Now, yeah guys, this is our basic example. Obviously, the second topic that we spoke about was paying attention to the price levels, double zeros and 50s, and also paying attention to the volume where price is trading. Now, we're going to go into some chart analysis now, obviously going over the volume profile and basically how to use it. But guys, if you have found value from this video, give this video a like. This is the opportunity, this is your opportunity to like this video, show some appreciation, and hopefully someone else will come across and see the exact same value that you've seen yourself. Don't be selfish, guys. Like the video, let someone else see it. Let's get into some charts.
Welcome to the charts, guys. So we're having a look at Aussie CAD now. Just letting you guys know that the volume profile is obviously not specific to just one currency pair. You can use it on whatever you're looking for, whatever you're looking at, basically. So yeah, guys, looking at things on Aussie CAD, we're just gonna go over the general overview of what a volume profile is and how we can also use this. So guys, the volume profile, like I was telling you guys earlier on, that we want to see where most of the volume is being traded, because that's obviously a fair value area. Prices move slower within fair value areas, and prices move faster when they leave fair value areas looking for other fair value areas. So just to break down the volume profile, this profile is obviously, this is a sessions profile. Where you can find this is obviously in your indicators, and then you just go to this bottom thing over there, which is obviously your volume profile. And then I clicked on session volume HD. So that's the session volume that I use, the volume profile that I use. So what we can see is that this volume profile basically has this area, this darker shade of blue. This darker shade of blue signifies or denotes where more than 70% of the volume traded within this day, wherever more than 70% of the volume was traded within this day, that's where we'll see this dark blue section of the volume profile. And obviously the light blue is the remainder of the volume that was traded, the other 30%. And then we also do have this red line that we see going through there. This red line is the point of control. So what the point of control is basically the exact price where most of the orders were executed for this particular day. Now, just having a general overview of, let's just go through this volume profile. What we can see, obviously, point of control here. So this is where prices are going to trade around. We see prices basically moving fast outside value areas. Like we just said over there, down there, we see a nice fast movement outside. When prices come back within or close to the fair value area, when prices come back or in close to the fair value area, then prices begin to slow down. Now we have this next day over here. We can see point of control there. Prices were choppy around our point of control. The moment we left the point of control, we speeded off until we found some other fair value on the top there. Obviously, prices weren't satisfied, or there was an imbalance. Obviously, sellers came into the market, sending prices again back to this previous. If we look at the back, this is a previous fair value area that was again turned into a fair value area over here. We do see some low trading volume on the left hand side, prices moving fast, high trading volume, prices moving slow. low trading volume, prices moving fast away from this area, going to look for the next fair value area. Now, once prices find the next fair value area, we trade around this fair value area. Obviously, the closer we are to the point of control, the more choppy markets or prices will be. The further we are from the point of control, the more impulsive and the more movement we'll see on our pair. So sometimes, guys, occasionally we have these larger fair value areas where prices trade within a range throughout the whole day, but nonetheless, once we leave fair value areas, prices move fast to find other fair value areas. Prices then impulse to find more fair value areas, and obviously prices will stop and stall around these fair value areas. So how can we use this volume profile? How we use this volume profile is now we have an understanding of where the point of control is. We also have an understanding of where stop losses will be. Because obviously, if this is the point of control, let's just get this drawing tool over here. If this is the area where most of the orders are being executed, we'll know. It's so obvious, guys, that stops are above the fair value area and stops are below the fair value area. Why do you guys think prices move so fast into these low volume areas or these low volume nodes? That's because that's where all the stop losses are, and obviously prices are looking for another fair value area for there to be balance, a match of both buyers and sellers. So guys, now basically we can use this volume profile to do one of two things. Obviously spot our consolidation areas, spot obviously where stops are, where we can be looking for potential entries, and we'll know, or we can use this to obviously spot areas where volume will or where prices will essentially trade faster. So once we leave a fair value area, let's cherry pick an example. We want a beautiful clean example for this, just so that you guys can understand the concept and the point. Now, if we look at this 15-minute chart over here, what we can see is obviously some fair value area over there, prices trading in a consolidation. Now we know that the moment prices break this consolidation, we understand, or we'll have a general idea of the fact that we could be entering an impulsive phase. So once we leave this consolidation, leave this this fair value area, now we know that we can be able to, if you want to be breakouts, obviously if you want to be a breakout trader, then trade in the direction of the trend. So obviously the trend's been pushing to the downside, so if you want to be a breakout trader, this is where we'll catch our momentum, because we understand, based off what we see from the volume profile, that we've left an area of fair value, and we obviously know that prices are going to search for another area of fair value where it can match both buyers and sellers. Sometimes that fair value area is very far from where current prices are, sometimes it's very close. Nonetheless, we can still be able to find our tradable opportunities. We'll know where stops are, we'll know where the stop hunts are, we'll know when the momentum is going to kick in. And yeah, guys, that's it. I guess basically just to add on with the volume profile is that we don't use the volume profile alone. We obviously use our other tools like analyzing market structure, understanding the direction of the trend, and all of these other things. The volume profile would essentially be useless without us actually developing a bias first, because we need to know which direction we're looking to trade in. So like now we have, just in front of us, we have Aussie CAD. So in the case, guys, we are looking for some selling opportunities, long-term selling opportunities from Aussie CAD. But the way prices have been violating structure is sort of corrective. So maybe if you want to align yourself on the buy side of things based off your bias, maybe from these higher time frames, let's just have a look at that. Just give you guys some quick analysis as well, make this video as valuable as possible. Maybe we see the fact that we have this double top structure over here and prices are violating in a corrective manner. Maybe we want to align ourselves with this previous impulsive move on our left hand side, maybe back to previous structural highs. So now we have a bias, we have a direction we're looking to trade. We know that prices are going to go and hunt those low volume areas because that's where stop losses are. So we'll see prices maybe poking into some support areas, and then maybe coming back up here into fair value area. back up into here, maybe consolidating because this is a fair value area, and then maybe pushing to the upside, guys. So we basically can use the volume profile to determine points of entry, points where we might see some consolidation, maybe even look for possible scale ins. And also we'll know, guys, that if we're trading within or around a potential fair value area, then our stops shouldn't be tight. We can't trail our stop losses very tightly when prices are in a fair value area, because we know that that's where the stop hunts are going to be. So we wait for prices to leave the fair value area. We then trail below this fair value area. Once prices find a new fair value area, we wait for prices to leave the next new fair value area, and then we trail stops below the consolidation or below the previous fair value area. So we can use the volume profile for a multitude of things. I guess the main importance right now is for you guys to understand the general functions of this, begin to look at it, begin to learn it on your own, and I bet you will find a way that you can use this and become profitable, or maybe even just start to see your consistently profitable trades, or maybe even you could start to see or you could improve the way you manage your positions. You could improve the way you enter your positions. You could improve basically your general understanding of the market itself, guys. Every tool is valuable in its own unique way. And I guess just drawing this or concluding with the whole video itself, I guess that's a very nice nugget for you guys, is that there's so many tools for you to use. Every tool is beneficial in its own unique way. There is no wrong tool. You can make anything work. So go ahead, have a look at the volume profile, see how you can use it in your own trading. And until then, hope you guys enjoy the rest of your guys' trading day or the rest of your guys' trading week. Stay strong, stay disciplined, and be profitable. See you guys in the next video.